Hello, my name's Erik Miller. I'm a passionate mortgage expert, and this is Mortgage in a Minute. If you want to win it, Mortgage in a Minute.
If you really want to win it,
Mortgage in a Minute! Sometimes the wordiness on the internet can be overwhelming. You watch these videos and you're like, hey man, shut your pie hole. I don't care how you found this program or your stupid discount code. Just teach me how to make a tiny version of myself dramatically appearing from an energy vortex. We've all had those instances, right? Sometimes you just want the info. That's my point. And this is one of those videos in one of those times. If this is the first time you're visiting us, thank you. I appreciate you, and I'm really glad that you're here. Please take a minute to like, subscribe, ring the bell, blah, blah, blah. As they say, you knoweth thy drilleth. Okay, clock please. Now, normally I'd pick a topic from the cup of knowledge and then ignore it and then actually talk about the thing I really wanted to talk about. That's how the videos used to go, but not this video. Oh no, this video is all business, which is why I'm dressed up as business casual from the 1980s. Anyway, today's topic is an important one, and that is the mortgage process. And especially, this is dedicated to first-time home buyers. There's always a lot of questions when buying a home for the first time, but what I want to talk about today is the mortgage loan process side of things. And in other words, once you get an offer accepted on a purchase, then what happens for the mortgage? Okay, as usual, I'm going to cram as much information about, in this case, the mortgage loan process, as I can while fighting a countdown clock of 1 minute and 59 seconds. Thus, making this video Mortgage in a Minute and 59 seconds, if necessary. So you know the topic here, you know the objectives. Now here are the rules. No matter what happens, when that clock strikes 1 minute, 59 seconds, if necessary, this video will end. The topic is mortgage process, specifically what happens and what you need to know as a home buyer on the mortgage side. I want to first say that this topic is basically impossible to do in a minute or around a minute, but we're going to go for it anyway. So let's see what happens. Ready? Set? Boop. Okay. Once the offer is accepted, you'll be asked to open escrow. Opening escrow basically means that you've completed the contract and now you get to go to the title company and put earnest money down. For the mortgage side of things, this is where it really starts. What you're going to want to do is first gather all your upfront basic documentation and get them to the mortgage lender as soon as possible so they can go through them. I have another video coming up shortly on exactly what those documents are, but for now, let's move on. While you're working with these upfront documents, getting them to the lender should also be creating a set of upfront disclosure documents from the information that they've received on your original loan application. Upfront disclosure documents are not the firm and final documents, but rather the document guide rails for the rest of the loan. So it's not the set in stone stuff, but it does set the loan structure, loan program, down payment, closing date. It carries some of these details. Once these disclosures are finished and you sign them, then the appraisal can be ordered. So the mortgage loan officer at this point should have signed upfront disclosure documents, upfront financial documents, and the appraisal ordered. This means the file's basically ready for processor submission. At any point from here forward, the loan can be locked. Locking a loan means that you are locking in the interest rate, and afterwards you will get a new notification via what's called a CD, which is short for closing disclosure. More on a different video for that later. Once the file's in processing, the processor will review the information that you gave them, and they may require an additional needs list of documents that are unique to your specific situation, which the underwriter will want prior to approval. Once this is received, the file can then be submitted to underwriting. At this point, believe it or not, the underwriter may ask for even more documentation based on your specifics. But if everything's good and the appraisal comes in okay, they should be okay to give you a loan approval. Loan approvals come in all types, but the one we're hoping for is called a CTC or clear to close. This effectively means that you are good to go. The file at this point is typically sent to... Shoot! I had it, I was so close. Okay, well, anyway, I'll just try to sneak some stuff in. Once the file goes to closing...